What's going on, everyone? Today we're going to talk. What's going on, everyone? Today we're going to be talking about the two trades that I took on Monday, June 8th, 2026. One win, one L today. We'll talk about why I took an L and what happened from there, and we're going to dive into it. All right, let's get into it. So let me fix this. Let me go to the charts. Boom. All right. Coming into market morning, right, on Nasdaq and on ES. Coming into the morning today, we created a SMT on the daily, whereas we swept these daily lows on ES over here, and on Nasdaq we failed to, creating a bullish divergence, and therefore I am bullish. Also on the 4-hour, where is it? Oh, sorry, on the hourly. Yep, on the hourly, that's what I wanted to show. On the hourly, what are we doing? We're disrespecting bearish gaps, and we are respecting bullish gaps. So I am very bullish coming into the morning. Therefore, what do I want to see, right? When market opens up, okay, this is very annoying. All right, when market opens up, what do, right? We react out of this 4-hour gap, and we have an unfilled hourly above. So if we're going to be bullish, what we're going to do is we're going to react out of these gaps, come down, tap this gap, and go up like we are doing. If we're going to be bearish, we're going to disrespect these gaps and just come down and take out all these lows, right? Coming into market open at 9:30, what do, right? We tap this 15-minute gap, and I wanted to see a reaction out of that, but we didn't. So why is this happening? Afterwards, what do? Let me get rid of all this. We create a 5-minute gap, and this gap right here is going to tell me what's going to happen, right? Are we going to continue down to this hourly, or are we going to take a long out of it if we inverse that 5-minute, continue higher, right? So coming to the 3-minute chart, what do we have? We have an inverse fair value gap that represents itself. It shows itself, right? We took a short out of that. Continuation down to the hourly. My short was here, and here's my mistake, and here's a learning point. Always put your stops at the wicks. I decided to put my stops at the middle of the wick and target a 1, 2, 1. No, I targeted like right here. Right. I think I targeted here. It would have hit on this candle, but that was my trade, and it lost, right? So learning point, right? Boom. Stops at the wicks, high, not the middle of it. And I wanted to break even right here. Actually, I probably would have got break even. But anyways, okay. Moving forward, we ended up taking an L, losing around $300. Then I was like, okay, maybe we're going to be bullish. Let's see how we react out of this hourly gap, right? And literally, what did I say earlier in the video? We're disrespecting bearish gaps and respecting bullish gaps, right? If we're going to be bullish, which we are. My next trade was here. I took a 3-minute, but I didn't realize that we had this little 5-minute right here. So I guess it's a 5-minute, 3-minute inversion, which I entered on right after that. Stops at the lows here, and I targeted all this internal liquidity, and therefore we were able to catch this long right here, right? Market generates buy side liquidity, we come down, tap into the hourly, and after that we are going higher, right? This is a good setup right here. Both were really good setups. The first one was, I guess we could say it could have been break even. I don't know. We'll see how. I don't know. It's hard to say. But that is my trade today, and we ended up making around $200 profit with both trades, which is whatever, right? So again, we tapped the hourly, reacted out of it, and boom, leading us to be very bullish. And that's today's trade. Everyone enjoy their day. Bye.